Good morning, good morning. How you guys doing today? Beautiful, beautiful day. March 21st, 2024. And we got some data that's been coming out and some big moves coming out in the markets, and gold is rallying, and a lot of questions from you guys as to what's going on, why are things moving the way that they are. Well, it's just following the storyline. Everything is following the storyline. You know, it's one thing that we talk about a lot here at the school, and it's following the storyline of price. And when you can follow the storyline of price, then you know exactly what is taking place, why it's taking place, and what is coming. So I'm glad that you guys can make it. Glad that you guys are with me because we're going to be taking a look at the currencies this morning. And we're going to take a look at gold, try to determine what's going on here, and figure out why price is moving the way that it is. So, once again, thank you for joining me, and hit the like button. Let's get this video going. Let's get it fired up. Hit the like button, and we'll get things started. So, first things first, if you follow us on Telegram or on Twitter, you would have noticed that I posted this chart the other day. All right. Gold was at 2162, and I posted that short term, we have a bullish bias. Okay. Now, why did we have a bullish bias? Well, there's a few reasons why, but most important reason why was because retail traders were short. Okay. Retail traders were short. About 68% of their overall positions were short. And what did we have here? We had an institutional area of buying in play. So when you have an institutional area of buying in play and retail traders are short, that's a recipe for a short-term bias to the upside. So that was the bias, and that's why I posted it on the social media. And sure enough, okay, this is where price was at the time. It was just right here. Okay, so this equals that. And lo and behold, what do you see with price? Short-term bias to the upside. Okay, so we got that short-term move, just as we were suspecting. And now let's take a look at retail sentiment, because wouldn't you like to know where it's at right now? I definitely would. So it was at 65%. And what have they done since? They increased it. Now we're at 72%. 72%. Okay, retail traders. So they're adding to their short as price is rallying up. Why is that? Well, because they thought price was going to continue lower. They thought price was going to do this. So you think the banks are going to allow them to profit from those positions? Especially not with demand in play. So as you can see, this area of supply has been removed, this one right here. And we got the big drive to the upside, and we're at 72%. So what I'm going to be watching for now is for the reds to come in, okay? For the short positions to come in. Aggressive. 72 is pretty good. I'd like it to be a little bit more, personally. And then once it gets higher, I suspect that we're going to see price pull to the downside like that. Okay, so it might take some time, obviously, but this is what I'm going to be watching for in the next week or so. In terms of bullish momentum, like, do we honestly think that this is going to start heading higher from here? Well, we don't have these signals, all right? The signals that I'm watching for a sustained move to the upside, I'm not seeing it. So until I get that, I'm not going to be speculating that this is going to be moving even higher over the longer period of time. We're waiting for specific signals. They haven't appeared on our charts, so we continue to trek along. The other one I wanted to look at was the euro US dollar. Okay, very, very interesting. Look at what took place. So remember what we were talking about. Okay. So far, exactly what I said was going to happen happened. Now, who would have thought? Why is it that exactly what I said was going to happen happened? How is it possible? Do I have do I have a crystal ball here? There's the upward trend here. Remember that? And you remember I told you, watch the short positions? Because right now, the main focus has been short positions. You remember I told you that? And I said, but watch what's going to happen, because they're going to drop price. It's going to contact the ascending trend line. And then they're going to start switching those short positions to longs. Why? Because the textbooks tell them to do that, right? Why wouldn't you just listen to the textbooks? Don't the textbooks teach you the truth? Right? It's all in the textbooks. You walk into your library. Hi, I'd like to learn how to trade. Oh, no problem. Here's a bunch of textbooks. Read the textbooks. And they open it up. Ascending trend lines. How to draw them. When price comes down and taps the ascending trend line, that's where you buy. Oh, so simple. I'm going to become a millionaire in 6 months. So price comes down to the trend line. So what do? Just like the textbooks say. Can't you trust the textbooks? Hasn't the textbooks figured it all out for you? So all you have to do is read it and then do it. Right. How well that work for you? Right? So look, so they enter into long positions. 66, 57, 52, they offloaded, and then they went hard up to 80. 80% long. And what do the banks do? Drop price. I told you guys. So you see, how would I know? Well, because when you know what's going on in the markets, it's not a shock. It's not a surprise. It's not anything that, comes out of the ordinary. This is completely normal behavior. I expect this. I use this to make me money. All right? You don't find this stuff in your textbooks at the library. You don't go to a bookstore and find this information at the bookstore. I'm sorry, but you just don't. I've looked for it. You don't find it. When I first started trading, I was looking for something that really made sense, because this support and resistance nonsense just didn't jive with me. I felt it was too simplistic, and it didn't make sense. Why on earth would price move up just because it hit a line that goes upwards? Why? Because everybody else is going to do it? Really? But most traders fail. So where's the logic in that? There is no logic. Okay, so then why is everybody doing it? This is what I thought. And I was looking for education that would actually deal with the reality of the market. Like, who are the big players? Why is price moving? How come people keep on losing? When you keep on losing something, that means there's a setup, right? You go to the casino, you all know the casino's rigged. Everybody knows that. You walk in, the chances of you walking out with a lot of money are slim. But we all know that the casino is rigged. We all know that those games have been mathematically formulated so that the odds are not stacked in your favor. Okay? We all know that. Why would the markets be any different? The markets are the largest the largest area where money is transacted in the world. So when you start to open your eyes to the reality of things, then you start to realize, oh, I see what's going on here. I see what's going on. And I'm glad you're finally starting to see. Because once you know the reality of what's going on, then you can start making money. So here's the deal, right? Retail traders were lured into going in long. Where did they get lured? Right here. So they went in long and they pushed price down. Then what happened over the last few candles over here? They started offloading their long positions to get into what? Short positions, that's right, which we can verify right here. Okay. So all throughout the move to the upside, they bailed on their longs and went short. This is typical. We see this all the time. So they went long at the test of the trend line. They kept on adding to their long positions, hoping to God price was going to reverse. And then it didn't. And then they're saying, okay, fine. It looks like it's just going to continue lower. So let's just bail on these long positions and go in short. And then that's when the banks throw it up. All right. So I was getting messages in the Telegram channel saying, why is the euro going up? I thought it was going to go down. Well, it I believe is going to eventually go down. But first we need to shake off those positions and rally back up and get them to go in short as it's rallying up, because the banks, in my opinion, from what I'm seeing, are going to start getting in short. So now as retail traders are switching from shorts to longs, which I bet you any money that's what's going on right now. They're switching from shorts to longs. The banks are going to come in with short positions. Okay? So all those short positions that retail trader accumulated as price was rallying, when they offload them now, the banks are going to take them on. And then some. And when they take on the and then some, that's what pushes price to the downside, right? When you flood the market with sells, it causes the market to drop. All right? But when there's an equilibrium of selling and buying, then the market bases, which is what we had really quickly up here. But once all the orders have been sucked up off of the retail traders, then you see the push to the downside. Okay? So that is what I'm seeing. Okay? You guys understand that? Let me just screenshot that and keep it for my records. Okay. All right. So let's also look at something that came out this morning, some news, and I made a post about it. I don't know if you guys got a chance to see the post, but let me see. Pound US dollar. Rate release this morning. Did you see it? Did you get a chance to catch it? Right? So this was my post, okay? This is before the rate was released, and I have yet to see what it was, so let me just bring that up. What was it? Probably holding rates the same, right? I'm not surprised. Let me see. Yeah, holding rates the same. Okay, so how is the market supposed to react to that? Well, I made this post here because this was the bias going into the rate release. Institutional supply came into play. So the bias is bearish. Bias is bearish. Okay? This was the daily chart. So let's look at the daily chart here. That's the euro. And then let's bring this back up. And let's switch to the pound. Okay. And look at that. At the time, price was 127.52. It's 127.40 right now. We got that push to the downside. Now we're seeing a slight push back up. This is the buying and selling taking place really quickly. But we got that push to the downside as we were suspecting. And so same thing happening here with the retail sentiment. Same thing. In fact, let's take a look at the retail sentiment now after the data was recorded. Let's see if it's changed yet. Retail sentiment is 68%. 68% right now, right here. So it looks like they're offloading their shorts for longs again. Now, what did I say? What did I say they were going to do with the euro? Same thing. Okay. Why are they offloading their shorts for longs? Why? Because banks want them to offload those shorts to them. Why? Because they contacted supply. This is a selling area. This is where the banks are looking to sell, but they're looking to add to their sells, their shorts. Why? Because likely we're going to see a push to the downside. That's the bias. Okay? I don't have a crystal ball. I can't tell you exactly what's going to happen, but I can tell you definitely what the bias is. I've studied the charts enough to understand the dynamics of price, the supply and demand, how it comes into the markets, what the storyline is, and how to follow the storyline. So from what I'm seeing, we have supply in play. Retail traders added to shorts as price was rallying. Okay, they did it again, same thing. Added to shorts as price was rallying, and now they're offloading their positions. Carlos asks a good question here. Do you compare COT data and sentiment together? Yes, I do, for different reasons. Okay, for different reasons. The COT report data is incredibly powerful when it comes to dictating what the storyline of price is. And I need to understand the storyline of price. If you don't understand the storyline of price, how are you ever going to understand what's going on? You know, if I look at the pound US dollar, COT data, the first thing I see, it just yells at me, screams at me, is I look at long positions held by non-commercials are 123,000. 123,000 long. What's the all-time maximum size that they've ever held long? 135. Okay? We're not very far from that. You know what that means? We're very likely going to see a massive profit taking on long positions. But what do you need? If you had 123,000 long, what do you need in order to get out of those positions? You need buyers, right? How do you lure buyers? Well, you drop price down to ascending trend lines, because that's what the textbooks tell people to do. Okay, you see how this works, folks? Right? I haven't done in-depth research to find out who were the first people to write books on support and resistance and all that stuff. But I bet you any money that one day I will take on that task, and I will research who were the first people to do the support and resistance. And I wonder whether it was the banks paying people off to create this system so that they could program their algorithms to use this information to offload positions and accumulate positions, or was it that, you know, good people just created the system and then the banks took advantage of this system and programmed their algorithms to take advantage of how retail traders were trading? It's one of the two. I can guarantee you that. Okay? Because when the banks need to offload their positions, how do you think they're going to do that? The only way they're going to do that is if they get enough people to buy. So you have to create chart patterns that seem bullish. You need data to come out that seems bullish. Everything is about making things look bullish so that they can offload those positions. So that's my main focus when I look at the pound, is they're definitely not going long, okay? Because yes, they can add to their longs, bring them up to about 135,000, and maybe even surpass it. It's possible, but the likelihood of that is not there, okay? It's simply not very likely. Okay, ladies and gents, you understand where we're at? I hope you do. And yeah, I'll leave it with that for today. That's our 20 minutes together this morning. I hope you appreciated it. I hope you liked it. Hope you got something from it. I hope you're going to use it for your analysis as well to help you make some good, positive, winning trades, and maybe even just stay out of trades that would have cost you money. All right, ladies and gents, that's it. Save your questions for next episode tomorrow morning, 8 a.m., as we always do. And hit the like button. Your support is greatly appreciated. The more support you give me, the more support I give you. So thank you for your time. Thank you for your love, and I appreciate you very much. Take care.